Welcome to CFO Principles interview series, where we explore how businesses are built. In this episode, we're talking to David Aferiat, who is the co-founder and managing partner of Trade Ideas. Trade Ideas is a platform that gives investors in the public markets the information to make the decisions that they need. So what the platform is doing is monitoring thousands upon thousands of stocks and ETFs on the exchanges, and then feeds that information to the investors so that they're going to make the decisions that they need to make with respect to the trades that they're considering. So an immensely valuable platform for the investors out there. So if you're considering investing, and you need more information, that's definitely the platform to use. But to me, this particular business is very interesting because it has chosen to go against the grain of what is the norm today. So what do I mean by that? So the common way to build software businesses today is to go out and raise external capital, then put that capital to work and build a product as quickly as possible, ideally, and then take that product to market and then basically go from there. Now, Trade Ideas has chosen to go a different way. What they've done instead is they've chosen to say no to external capital, and they've chosen to build a product in-house without the external pressure that comes with that type of money. So they've been able to build a product methodically and sequentially, and have been able to really give themselves the time to think through what does the product need to be and what do the customers really want from it. So it's a very interesting journey that they've gone through, and the business has been around for nearly 20 years now. So that's why, to me, it's a very interesting software platform to really explore. And I'm going to have David begin with the conversation by telling us the story of where the business began. So here it is.
The company started in 2002. We started collecting revenues in 2003, and the genesis of Trade Ideas was actually from what my partner and CEO that I went to college with, actually the three main partners all went to the University of Texas together. And Trade Ideas was, as I said, started in 2002 from the ashes of a previous company that my partners both had created, in which my partner the CEO and partner likes to say, the $30 million education, which was a technology company that was aimed at doing the back office administration for direct market access into the capital markets back at that time. And it was an idea that was created, and that he got to a mezzanine round of funding from Menlo Ventures, very well-known, venture capital. But that experience really taught him what not to do, because as that money was raised, it came with, certain responsibilities and a board, and eventually that board, and the vision of the CEO went in two different directions, and he lost control of what he had created, and the subsequent history of the company did not fare well, and basically fizzled. But out of that experience, there was an intense to call it an intense desire to create something new that wasn't so weighed down by regulations, but that was an easier trading tool that could provide helpful information to make better decisions, and to do so outside of a broker dealer or being a pure technology play, and to do so without the weight and burden of external capital. So the company Trade Ideas was formed, and I was essentially the third, kind of person that they had a concept, they had vision, and they just needed someone to kind of build out strategy and business development and get the product in front of people. And so we started the company around those three essential responsibilities, coding the concept as described by the visionary, and then handing it over to the guy who can, go out there and knock on doors and get it in certain key places. And that's what served us well when we started with a very simple scanning tool, which is what Trade Ideas. Let me take a step back and just kind of say, in terms of history, our mission over these 18 years has always been the same from day one, which is enable our subscribers to make better decisions in the U.S. equity markets. We started off as a simple scanning tool, select a few indicators, pick a few filters, and then see a curated, customized view of the market the way you would like to see it, based on technicals and some fundamentals, and see those results in real time.
Mhm.
And from that simple from that mission and that simple first iteration of call it a minimum viable product, we were able to collect subscriptions and start building and innovating on the tool. Uh, the My partner is kind of like that Bill Gates, that visionary who among the three of us traded the most. And I've certainly learned from him and now trade more often than I did, years ago. But you need that kind of visionary to be able to say, great, we're here, but the product needs to go, in this direction. And then as circumstances change, adapt that vision, but clearly kind of keep pace with what is fundamentally the first order of things. Make decisions easier and do so in a way that provides helpful information, an advantage, an advantaged information, out of the hands of the institutions and highly capitalized hedge funds type, institutional types, and put it more in the hands of the individual, investor, the individual trader. That's been our mission since the very beginning in our approach.
This is actually very interesting. So the few things that you pointed out is you wanted to, or you guys wanted to achieve the objective from an operational perspective, not from a mission perspective, but you want to achieve the objective of not getting the company bogged down with external capital, right? So what was that journey like, right? Because what you're talking about, developing the product, putting that in the hands of customers, making a purely technology play, all those things are very expensive things to do. So how did you tackle the actual execution of that?
It's study and contrasts. I mean, before, and this is the very nature of sometimes why venture capital, external capital, just is not appropriate at certain stages, and certainly at the beginning. The previous company could never get a fully out of beta working version. It was always, they fell syndrome to just one more feature, just one more thing to fix, just one more, and it was never stamped, released, and sent out there. It was always among these beta users. With Trade Ideas, it was a simpler tool, and it was put it out there, get it out there, have it used, give it feedback. And the costs initially, and back then in 2000, we're talking about an entirely different kind of processor and computers and capital, or I should say machines to produce all of this analysis. And yet we put it out there as a SaaS model, a subscription, software as a subscription model. And we collected a few subscribers, and we were moving and puttering along. And it wasn't really until we established the value of what we were doing. I said again, our mission was to help subscribers make better decisions in the markets. Our value proposition then and now was always the ability to show people where certain market activity was happening before anyone else, and in places where no one else was looking. And that value proposition we were able to present and partner with our first major enterprise licensee, which was Scottrade. And there's a sales journey, in that. But you asked your question about how, it's expensive to start up a company. Yes and no. I mean, I certainly went without a salary for the first 2 years or so, as we kind of invested our sweat equity, invested in building, the technology, and then the capacity to, have a few subscribers and build on that to pay for certain expenses, and then go out and knock on doors. And my first attempts were, in New York, in the, Valley of Wall Street, in the corridors there, banging on doors and looking up everyone who had the word capital in their name. And you quickly kind of realize that the major industry names and marquee names that you wanted on your website at the time, Merrill Lynch, UBS, several others of that nature, Lehman Brothers, for example, you quickly realize that they had at the time trading desks of maybe 150 people, but rapidly dwindling because of the technology and the ability not to have so many people on the floor covering certain sectors of the markets. That was getting done more and more by technology and machines like trade and services like Trade Ideas. So once you got a large name like Merrill Lynch, you realized it wasn't millions of people or thousands of people. It was like tens or a few dozens of people. But the effort to get through that sales process was enormous. And finally, I made the decision that I don't want to do this for all this work just to get 30 seats, 30 licenses is nothing. Rather, if I'm able to find in a company someone who can make the technology, the person in charge of the technology responsible for tens of thousands of people, then I just need to reach one person who affects what 10,000 people use. And that literally put us into the retail space where companies like E-Trade and Scottrade and TD Ameritrade, they have one platform, they give it out to everybody. And if you can make the value proposition and show the mutual benefit, or the benefit that the brokers would have for using this technology to help their customers make better decisions, then convince one person, you get 10,000, you get 10,000, 20,000, 30,000 people using the tool. And that's the leap that Scottrade made with us, and that we benefited from greatly. Obviously, our revenues rose, quite significantly. And 2 years after that, that was about 2006. So 2 years after that, we were able to sign E-Trade. And from there, we thought, okay, now we're cooking with gas, and everything is, now perhaps we can sit back and let the other brokers come to us.
Yeah.
There's some lessons there about what to do and what not to do, but those were key early highlights of the company that always funded, the next step.
Mm-hmm. So, and did you choose to, when you were entering the such large players, Scottrade and E-Trade, I imagine that there was either an option or a thought on the table as to whether to white label or whether to brand the tool. And one, did you have to encounter that? And what decisions did you have to make there?
Great question. Scottrade was actually quite happy with our name, Trade Ideas. Simple, stated exactly what we did. The beauty of the company name and the brand we were able to create around it. So they, and again, times are much different. But back then, the path was let's do a heavy implementation where our technology is embedded inside their heavy technology that's downloaded to the customer, that's opened on the desktop and utilized. And within that schematic, here's Trade Ideas, offered to you by Scottrade. And Scottrade went so far as to even build awareness around it. They did a commercial of, the CEO flying around in a helicopter and talking to people. And the guy's like, I use Trade Ideas because, I want to make better decisions in the market. Great experience. E-Trade took a different path. E-Trade said, we're E-Trade. We like the technology. We're going to call it something else inside of our tool, Strategy Scanner. And we will implement it into our platform and provide it to our customers. And that that relationship lasted 10 plus years, which takes a continual effort to, and it's an effort because management teams are always changing. Product managers are always changing, and new regimes abound all the time where people get into the seat and say, okay, I want to shake things up, or I want to do things different. Let's line up everybody, that we're partners with and figure out what we're doing and who we're paying what. And you always have to navigate that and be able to counter and say, our guiding mission is this, the value we're providing is Y, and here's the benefit to you.
And so that's actually, so you had two polar, opposites, and from that perspective with the two customers. But so let's talk a little bit about you mentioned this quite a few times now about the sales cycle, right? And entering those large enterprise customers. What was the decision-making process and the learning process as you began with one, you decided to get into the banking world, and that was 30 licenses for an enormous amount of work, and then going into E-Trade and Scottrade. Can you talk a little bit about kind of the specifics of the learning process and what were the pain points and the decisions that you had to make to basically say, okay, well, that was a lot of work, right? Because it took us 6 months, 12 months, or however long to get in the door. But what was that journey like for you guys?
Well, I mean, it's always, it was pivoting and taking data, taking, what we could see. I mean, I was, in New York quite a bit, and I could see other competitive services, um, that we roughly would consider competitors doing the same thing, breakneck speed, trying to find like, and then, UBS and Merrill Lynch on their website was the prize. And frankly, sometimes they'd say, we'll take your product, but we're not, you're not allowed to use our name on your site, so that would kill it there. But I started to see the carcass of other companies, of competitors, just that would flame out, that were just there one year and gone the next. And I was trying to find our handhold, and it quickly just kind of dawned on me that the work to do all this was too much. I'd rather invest in a relationship with one person. So we started attending trade shows. We started attending where our targets going, and back in those early 2000s and so, we would meet at these trader expos and conferences that would bring technology and that would bring individual retail investors, into one place at different locations in Florida, New York, and Chicago, and a kind of steady drumbeat as to, here's our growing subscriber base, but more importantly, here's the value that we're providing, the new capabilities, what one can do, the ability to see not just the chop at the top of the market, but below the surface, depths and fathoms below where certain counter trends are happening. And if it's a bear market, you could always see further below momentum stocks that were climbing, or you couldn't see them because you didn't have the ability to, with trade ideas, to be that periscope. That was an early analogy that we always, we would often use. But, taking on Scottrade, taking on E-Trade, getting these customers was also a huge benefit to understanding. Okay, now we can breathe a little bit, and we can do all this, by the way, without the mantra or the pressure of a board and external capital, with timelines. It's very, with that kind of pressure, oftentimes you raise the money, you're pressured to spend the money, and if you spend the money, and so sometimes it goes into marketing and just get pissed away, frankly. Other times you just, in this effort to try to spend the money to do something, you may hire and then you may have to let go, and that's not the cycles that we wanted to go through. So that money is propellant, but sometimes you can have a vision for what you need to do and you propel forward to that. But if you're off by a certain degree or two, I mean, if you're navigating the stars and you're off by a few degrees, you'll miss a whole solar system. You'll miss it's science about how they can launch something from this planet and land on Mars and get the entry angle right and all of that. Because if you're off by a few degrees, you bounce, you burn up, or you miss the planet entirely. So in some ways, had we taken the direction of this money, this advice, and the urge to spend it, we might have been making popcorn machines, by the time we had veered and gotten to where we are. Instead, it was like we go at our own pace. We move as we can move, as we see the market and we see the technology coming our way. During this whole process and this, innovation, we were building not only the features within the tool that we wanted to see, but the genius of my other partner, the back office capability of organizing servers and computers to ingest data and then parse it and then database it and then draw statistical analysis from it before republishing it, in a different derived format for our customers. We used to throw around terms like big data, and big data still is a concept, and it's still a core competency of what we need to do to produce what we do today, which is now using big data, the kind of machine learning AI that helps us with the analysis that we do and value we deliver to our customers. So all throughout that, one begets the other. And, how we grew was very much from this trio to, I would say we've spent and invested today even more, body counts and assets and investment into our innovation and support of the technology more so than we even do with like the sales aspect.
Yeah, I love that you're talking about you bringing up a big problem that I see, right? And actually, the even the people that I work with, the get the money, spend it is real. I've actually had conversations with people where and CEOs who are concerned that the amount of money that they have in a bank is going to last them too long. So there's a push to let's dump some money there, let's dump some money there because we need to be at 18 months. Or we need to be at we can't be at more than 24 months because of X, Y, and Z. So it's you're bringing up an interesting perspective, and for me, being the guy that's focused on business fundamentals because I'm my by trade I'm in the world of finance. It's very difficult to see that, but nonetheless, let's talk a little bit about the infrastructure that you chose to build throughout the process. So let's focus on the people for a second. So you started with a small core team, but obviously a lot of time has passed. How did you choose to build, whether it be departments or organizational units? How did you choose to structure and build a team that exists today, and what is the strategy that you use?
Well, we all use our networks in different ways, and I credit both my partners, but our chief technology officer and partner, who designed the code, really fell back on some previous relationships and his network to find people that he had worked with in the past that could speak his particular language and with whom he was very comfortable, with, and that's very key. My other partner just likes to say, even when we went to college together, I mean, I went there for what I thought was the education and the learning and the books. And he was like, no, I went to college to network and to meet people like you. And, in the end, he's right. I mean, that still stays with me. But as it's interesting. So just getting to a quick story, as we, one of the aspects of growing was we had a kind of support forum on a board, on a chat board. And, we used to direct everyone to, put your questions in there. We'll get to them and answer them. And I often answered a lot of the questions at the beginning. We all kind of took turns. We had an operational partner come on, and he and I would also, answer these questions quite a bit. And along the lines, at some point, someone else started answering the questions. Someone else who was a subscriber started answering the questions for us and would get to them quicker than we could, and often had a better, more detailed answer and example and recommendation. For instance, someone would come and say, how do I put together the following scenario? A cross above the 200-day moving average with, higher than usual option volumes. And how do I that's what I'm looking for. And a guy named Barry would be answering these questions faster. He would provide, our technology had the ability we had a viral component built in where you could share your strategies with others. And so he would build the strategy and then send the link that you could import and then see exactly what he had created. And we're like, who is this Superman who is answering questions faster than us, frankly, better and in a more creative way and thoroughly. And so we approached him, and it turns out a gentleman who lives in Vancouver, Canada. And we're like, you know what? Come aboard and just answer these questions. And to this day, he's still with us. That's a deep part of the culture we've built that, many people don't leave Trade Ideas because of what we've created and the culture that we can talk about later that we've created around it. But Barry, to this day, we've abandoned that particular, support forum and gone on to other areas like YouTube and our own, now he runs a trader's room where customers come in and spend the day, in a very collegial, setting that he's very, firm about running. It's mainly, one-to-many communications, and people can chat their answers and but we don't have. He keeps the maniacs, away and keeps everything very cordial. And because he's Canadian, so he's very polite, and everything is run, perfect. So that's an example of how we grew, and we, from that experience, just always making sure that we had a support and we can talk about product strategy later, but the tool, is a sophisticated tool, and we try to make it accessible, but it still is a sophisticated enterprise. I mean, if it were easy, everyone would be doing it, but trading is a mental discipline as much as a technology, um, uh, innovation.
And when you were building the team, did you choose to have particular departments, let's say, or did you just bring on people and say, hey, you're responsible for X, Y, and Z, and we don't care about whether it's in this functional area or another functional area?
So my partner's really good about finding particular people, and oftentimes, he's not necessarily. It ranges, right? So between we've yeah, all of us at some point have identified key people to bring on, and some of them was an early. We kind of we were able to. Our fortunes were, the revenues were rising at such a rate that we were able to acquire a very small kind of one man operation, but acquired the technology that he had at the moment, but more importantly, his talents to come aboard and to eventually be our chief information officer. But um, you know, him coming on board we were able to further, accelerate. So again, another developer who had a side business, and that we were able to kind of incorporate elements of that technology that he had, we used to further grow and innovate to create the next vision, the next milestone in the vision of what the tool needed to do. So in the end, right now, my partner still does a lot of the selecting and choosing. And the best buffer for us has been the same model with Barry. That is, present the technology. You're not coming to us out of context. Many people who join the firm come to us within the context of, I was a subscriber, I was a user, I love the tool, can't get enough of it, and see Trade Ideas as we have our outreach over support on YouTube in various places, that people just say, I want to be part of this. And once you show us that you've mastered, that you have some trading background and that you understand the tool, then it's very easy for us to either place you in a support role to help and give support back to people, or to help with, development, and accelerate our the next feature and the next innovation and the next service that we want to provide. And then I help to work on the culture of the company, so that once they're in, and they, it's almost like reconfirming exactly what they could see and sense about the company. They come in and we go through a small kind of exercise. And before COVID, we had our in team. I should say before COVID. Before COVID, we were a very dispersed team. I'd say about half of our team is in California, Southern California, but where we talked about Barry in Canada, and the other individuals that we hired were, all over the country, from North Carolina to Atlanta, to, the Denver area, and Texas, and, points in between, a farm in Indiana.
So you've mentioned culture a little bit, right? And um, having people in different areas of the country, different countries as well. Um, what is How do you go about designing a culture that is cohesive in an environment where geographically people are not cohesive in one place?
Yeah, it's not an easy task, but we were already dispersed before COVID. So when COVID happened, it was very much, hey, things are as usual, and we get a cadence around weekly meetings, really a bi-weekly meeting where we're talking through at development teams meet, and marketing and support teams meet. And if we need additional meetings around that, we do so. But we use Slack as a kind of water cooler experience where different threads can be themed around different aspects of the company, from business development, obviously, to support, to random in general, which is like our water cooler, and all sorts of things and conversations, and happen there. It's not a substitute. So again, even before COVID, we had intentional times of the year where we gathered together, all of us, and we will resume that shortly. But as I said, the list has grown. We just hired someone from who lives in South Africa, and so. But came to us because she was an expert at the tool and wanted to keep using, wanted to be inside the tent using the tool. And so therefore culture is important. And around 2018, we really kind of codified from a cadence of meeting every year in Southern California, great place to visit. We really we took our first stab at defining what our culture was, what our values were, and what we believed about the company. And those were kind of like in between our sessions. We just put, poster board or 3M, sticky paper on the wall, and people wrote their answers. And I thought I would like take it and reshape it and workshop it and wordsmith it a bit. But in the end, I just took a picture of each of these three, categories, and that's the basis of which I kind of welcome every new team members to say, congratulations, you're here. Let's walk through. And that's not so much a history of the company, although we talk a little bit about that. But let's talk about these three elements: our culture, our values, and what we believe, and then kind of treat it like a Rorschach test. What do you see, in that? And they'll look and they'll go, well, that resonates with me. And then we'll say, okay, well, here's the story behind that. And when we're done with that, I feel the benefit of knowing them better. They feel the benefit of like context about and how they can speak the language. And all of this is in the service of helping everyone, whether they're, next to each other in Southern California or in South Africa or wherever they are. You want them making better decisions because they understand, how to make a decision, knowing the values and the culture and so forth.
So I just recently actually went through a couple cycles of developing the MVV, right? Mission, vision, values. And in my company, I went even as far as defining ways and standards, which is kind of a subsection of the MVV. Talk a little bit more about like how did you go about and how did you define the mission of it itself? Because one of the challenges that I had to encounter was what the heck is a vision and what the heck is a mission? What's the difference between them? And because it seems like a very simple question, like a simple thing, but it actually is quite challenging to define.
The mission is you're stuck in an elevator between floors, and the elevator and the floors are you got 20 seconds to just get out what it is that you do, and not tagline, but what is it that you do? How are you helping the world? What is it you do? And the vision can be a little bit broader, a little bit more, branding about that. But it was many years actually and just because we eschew, at different points in our history, external capital from venture capitalists, I don't shy away from talking to them. And one of them actually kind of cornered me and said, "That's great, but you got all the flowery stuff, the mission and everything, but what's your?" I actually even had the CEO of Interactive Brokers turn around to me and say, "Well, what's the value proposition? What's your secret sauce? What is it that is frankly, that should be outlawed? What are you breaking, or what are you doing, to give the advantage?"
Mm-hmm.
And I was like, if you don't have an answer for a CEO like that, for a big partner like that, you better go back and find one quick. And that's what I talked about before. For your vision, for your mission, and then what the value proposition is, it's how do you make the secret sauce? How do you give people the unfair advantage? And for us, it was what I said at the beginning. I mean, helping our customers to find opportunity before anyone else in places where no one else is looking.
Mm-hmm.
Now, the ways and the standards and the means of all that, then you get into machine learning, AI, and 18 years of innovation and, particular features. But you notice I haven't talked about anything about, a chart, but all those are underneath all that.
So we talked a little bit about the people and the culture. I'd like to come back to the product a little bit. So first day of the product is very, very rarely what the last day of the product or the current day of the product looks like. So what is the evolution that your product has had to experience? Did you decide to, did you potentially pivot into different verticals? Did you tackle different aspects of the product? Was it a technological challenge? What was that journey?
Again, I got to give such credit to my partners. And you sometimes stumble on the value that you take for granted, and then you don't take it for granted anymore. So in our history, I mentioned, our early successes with Scottrade and E-Trade, fantastic. And frankly, for different reasons, and the cadence of the company kind of, in my mind, slowed a little bit for about a year or two, where we kind of took the foot off the gas pedal, and we thought, hey, all these other guys are going to come, and any day now we're going to get a tap on the shoulder and a nice big, who knows. That never happened, but that's fine. We kept going, but we started creating families. Some got married, started having kids, and we just kind of took a different approach toward the company, one that wouldn't have been feasible, by the way, with external capital and the drumbeat and so forth. And during that kind of pause, if you will, we had a competitor arrive on the scene who, quick look at the team behind that competitor, we realized that in that team, that one of the top people in that team was a previous customer of Trade Ideas, had been for 4 years, and then suddenly created something that looked so similar to us as a facade. The GUI interface was so similar. He had a different color theme based on a different kind of idea. Sort of, it was called the Mad Scan, I believe, and he was using a little bit of like Jim Cramer's Mad Money kind of theme at the time. And we were forced with the decision, do we, this competitor, if you will, kind of snapped us out of a little slumber that we were in, and do we take them to court and express our outrage and go to battle? Well, we don't know, how they're capitalized. We don't know what exactly is happening. Their pockets could be deep, they could not. But why, if we get the lawyers involved, everyone loses, and that's not necessarily an outcome. So we just said, you know what, time to go into hyperdrive and pour resources back into the company and innovate and continue on with this mission that we have and try to outrun them. And so we subscribed to their service and did just that. And 6 months, 3 months down the line or so, we get we saw the company-wide email that goes out. Oh, we're sorry for the interruption in service today. Our growth, et cetera, happened, and we apologize. We'll have the servers back up and running again, within an hour or tomorrow. And these started happening instead of 6 and 3 months now, like 6 and 3 weeks, and it started happening sooner and sooner. And we sort of realized, you know what, we don't go down, but these guys are having some serious issues with not the front part that looks somewhat similar, but the back part, which is powering all this. And we thought, you know what, and it elevated for us. We don't take for granted, not a day since, the careful orchestration and genius and intention that went into how we deliver the service, how we ingest all this data. We started to realize that we have such amazing capacity and capabilities thanks to our CTO and partner, a brilliant guy. And when we added this other company I mentioned that we kind of acquired, just realize anybody who works around him just gets smarter, gets better as a result. And the product, how it's changed, went from the simple scanning tool to saying, okay, let's take the examples of what scans work, because people would bring their own ideas and very quickly then turn around and say, well, what you guys use the tool? What works in the market? What scans are producing the best results? And that led to the creation of a back testing tool. But even our back testing was a little bit more evolved than most at the time. And even today, most back testers will say, give us a stock, pick an indicator, and we'll go back 10 years and we'll tell you every single time that you should have bought the stock and sold it. Okay, well, that's great. But when you're dealing with, the value that we want to provide, you don't want to know, you may not know a priori what the stock is that you want to analyze. Instead, you may want to analyze the event. And so we created an event-based backtesting tool that says, don't worry about knowing the stocks ahead of time. You want to know what stocks that are higher than usual option volume and, that have higher, that have, 50% or more earnings growth quarter after quarter and are, we're up 4 days in a row. That event, we'll go and find the stocks that match that event and then run this backtesting test we call the odds maker, where you can inlay, okay, I'm going to risk this amount of money. I only have this amount. This is my risk threshold. You pull the lever, push the button, and we print out, or display for you the equity curve, the result of those tests under those risk, that idea generation and that risk management profile yields an equity curve. And that was a great innovation for us. So now we had this component of saying, take your ideas, test them, and then bring them into the market. Very quickly, we ran into the problem where everything that everyone wanted to test and pull the lever and get the result turned out to be terrible. And so it just begged the question again. And we would say, congratulations, you just saved yourself a lot of headache, but that's not what we want to do. We don't want to discourage participation. We want people to participate in the market. And people, again, ask us very quickly, well, what strategies are working that this odds maker tool, show as good results? So it was on us to create good examples and then share them. As soon as we shared them, though, at scale, the market's always adapting and changing. So 3 weeks, 2 weeks, 10 days later, this beautiful, algorithm that we had created was already decaying and not performing very well. And so they were like, more, can I get the next one? What's the next one? And that led us very quickly. Now we're passing years and years of this into the ability to turn it over to a machine learning AI to run these optimizations on the algorithm that take the idea generation and the risk management and run it hundreds of thousands of times overnight, like we do now, to arrive at this is the best algorithm for tomorrow based on yesterday's activity and previously. I skipped over, though, a big pain point. I mentioned how at scale, we started having to create the best examples of what was working in the market. And that was consuming too much time. And as a result, we came up with a product strategy that has since guided us since this was about 2017 or so, actually 2015 and on, because we started using the AI at the first trading day in January 2016. As I mentioned, the back testing and creating the scans, those were a lot of sticks before you ever got to a carrot. And finally, when you pushed the odds maker button and saw the result, you got another stick because you realized, like, hey, this strategy is terrible in the market right now. Go back and do it again. And so a lot of sticks before you got to a carrot. And we were churning through a lot of customers as a result, people who would come to us full of ideas, try a few, and some would stay, but we weren't getting to ring after outer ring of newer customers that were that could stay with us because they were just getting hit in the face with a stick before they saw a carrot. And so our strategy, which is easy to say, very hard to execute on, and frankly applies to not only our technology but to services and products in any industry, is the following: deliver the maximum value on the first impression. If you can deliver the maximum value on the first impression, you've provided the carrot, and then people will hit themselves with a stick, to learn more once they can actually see so the carrot for us is, what is a working strategy right now that you can use, and what is the idea that came out of such a strategy? Show that first. So when someone finally goes to the effort of believing what what it can do for them in their lives, and they're in simpatico with your mission, and they finally put down the credit card and they subscribe to the tool, the first thing you want to show them is, here is your first gift. Here is what's working and an idea for you right now. Then it's like, great. And here's another one. Then I can go and thankfully, the rabbit hole runs deep in our technology. You can go layer and layer and layer further down and realize there's so much here. It's fantastic. But at the very top, it's very simple. Show me what's working in this market and give me an example.
So that you're absolutely right. It's easy to say, very challenging to do. Let's say that you've been able to accomplish that very first task, right? Through whether it be in a very simple way of, here's a strategy that you can use today. But you mentioned that there's a lot of layers to the product. With that in mind, how do you find that your customers are diving deep into the product right away on their own, or do you have to guide them through experiencing the product so that they understand that the surface value, even though we've presented it to you already, is not the only thing. And in fact, there's so much more. And the reason that I talk about where I ask this question is because at the end of the day, that's what defines your ability to increase to your ability to manipulate pricing, right? And to potentially get customers to pay more or less, right? Depending, because now you demonstrate the value. Can you talk about that a little bit?
Or third category, develop new products, separate products that speak to those needs. Yes, I can speak to that question. It's a good one. The It's such a good question. I repeat it to me one more time. It's
So the way that I think about this, so you mentioned that you have on first when on a first impression you deliver the maximum amount of value,
right.
but
Okay,
once
got
you
it.
deliver that, there's additional value on the back
Got
end. How do you get people
got
to
got
deliver that?
got it. Right. So you have to segment your customers, right? And once you deliver the value up front, it actually starts to beg the question about segments to say, well, who's to say that the value of this is going to be universal to everybody? For instance, if I'm showing you this idea and it's an intraday, trading idea, that's going to make some delightfully happy, but for others with a longer term view, what do you have for them? So the more you can find out who they are as they approach your technology, the better you can be at showing what that first impression of value is going to be, a longer term idea and so forth. And you can do that by segmenting your channels to reach out to different, aspects of people that are going to find value in your product. We talk about, we satisfy tens of, with thousands of people right now, but we want to get to hundreds of thousands of people later. And that customer 100,000 is very different than customer 10,000. And to reach customer 100,000, they may be very much more detached from, let's say, their computer or their desktop. Their means of taking the information will be very different. Maybe it's on their watch. Maybe it's on their clothing by the time we get to them. Maybe it's, it's not necessarily at the desktop. Maybe it's more of a information product, which we're developing and launching, in the next weeks or so. And that, by definition, is more of a longer-term view of the market. Ideas that go for maybe a few weeks or months, that show more sector rotation. The way we look at the market, that's of interest to those. And so that's how you can better segment customers, because there are some who are going to want to go very deep. And, we used to say that when I talked about their churn issue before, we were satisfying what was a data scientist type of trader. And yeah, that's fantastic. It's great to have them. Maybe they fill up a zip code, but you want more, frankly, some of them that you only fill up a phone booth, to date myself, but you got to get beyond them. And therefore you got to shape the product, but changing that, our products through our product strategy, and executing on that, we started asking better questions and coming up with, better ways to segment our customers, and again, my partner is very exceptionally good at laying out then, okay, for these customers, let's provide something like this, and shapes the way that the product has to deliver to these different segments.
Great. This has been a great conversation. We're nearing towards the end here, and the last question that I want to ask and close with is, when I look at my company and when I look at my clients' companies, and I look at the future, there are certain things that excite me and there are certain things that scare me. What are those things for you?
One thing that doesn't scare me is the fact that we're always asking our CTO and my one partner is always asking the question, like, what is the trade ideas killer out there? And can I design it first? Can we have it here first before we experience it out there? And I was like, that's a genius way to approach, it's a genius way to approach a business. It's a genius way to be a custodian of the business, because that's all we are. We are custodians of this technology until someone else can prove to us that we can do a better job, and then taps us on the shoulder and says, we got this. But until then, it's, that approach is an inspired one. So as we innovate, and after 18, there just isn't a lot of people out there who approach the market the way we do, with our collective 18 years worth of, survival and growth and lessons and learning, that we have. And, you can see that with the people we attract, and you can see that with the way, we provide 10 hours worth of programming to support and help our customers learn and make the best of the tool. But you put aside all of that. What brings me the most joy is when we actually do speak to our customers one-on-one during our pre-COVID, what were our user summits, where we invite our most ardent fans to come to Southern California, listen to some other great market, data and economists and forecasters, and then our own, team talking about the tool in the future. But outside of that day worth of talks, and during the breakouts, we steal customers away and we put them in front of a camera and we say, what do you believe about trade ideas? What does trade ideas help you do? And once you get past the, well, it helps me trade in the market and I do better for it. Like, what in life are you using trade ideas for? You get these crazy stories about a young man who wants to create a soccer academy for underprivileged youth, and he's using trade ideas to generate the seed money for this. And you're like, what? It's crazy. There's another guy in Florida who's a photographer, and he subsidizes or supplements his income outside of the high season during the summer with his weddings, and so forth, with, trading, and using trade ideas to make those better decisions. And it lasts him, through the seasonality of his passion, which is photography. Those stories are pretty incredible. And the more we talk to our customers and find these things about what is it, we're not all pursuing money. It's money in the pursuit of what, that you really start to connect with people and realize there's a big responsibility here for getting this technology right, being up times, as high as ours are, and continually innovating to make people better decision makers.
Money in the pursuit of what? I love this. So, David, I want to thank you for your time. This has been an amazing conversation, and wish you the best of luck with trade ideas.
Thank you, Luis.